begin with the core concept of income tax. Why income tax? What is the meaning of income? What are the sources of income? Who are included under income tax? So what are the categories of taxpayers, if I may call so? Now, how does the whole thing work? This is also very important to understand. How does the whole income tax concept work? What does filing of income tax return mean? So there are two parts to the income tax angle. One is determination of the tax amount in each individual case, and filing of income tax return, which also is very important. Let's look at that. When I am liable to pay the income tax and when I have to file my income tax return. Advantages of filing the income tax return, and finally a very touchdown on tax planning. So let's begin with the core concept. The tax on incomes as per the Indian law and as per the Indian constitution has assigned this power to the central government. So central government has framed a basic income tax act which has got all the major definitions and all the procedures and the entire functioning of income tax is done through that. It is an annual tax, so every year you earn income, and so in the next year, that is just in the following year, you need to calculate the income tax and you need to pay. So the calendar is like April 2016 to March 2017. So April to March is the calendar year for the income tax. And once March 17 is done, so the year closes, and based on the timelines, that is the due dates for filing income tax, you need to accordingly pay the income tax and also file the income tax return. And of course, after March 2017, the new year, that is April 2017, begins afresh. So April 2017 to March 2018 will be the next year for the income tax point of view. So it goes on every April and ends on a March. Now, tax calculation has to be done by the taxpayer. This is also very important concept. Now, some taxpayers may not be aware of all the income tax rules, so that is fine. You normally go and take the help of tax experts. But again, the tax experts will do everything on your behalf. So it is you who have to, do the signing and final checking and everything. So that's an important point. Now, tax is to be paid to the central government directly. So there are no intermediaries involved here. So it can be done two ways very quickly. It can be either done manually or you can do it online. Now, there is a different rate of tax for each category of taxpayer. So it's like Income Tax Act has got various categories of taxpayers. For example, there is a category known as individuals. There is a category for partnership firm, and so on and so forth. So there is, every category is having a different rate of tax. So you need to know the category, your category, that is. And because of the entire structure of income tax, the collection of tax is difficult from the government's point of view, and so there are also tax losses. And the major reason is on a voluntary concept, that the taxpayer himself has to calculate the income which is taxable, and then he has to calculate the income tax, and then he has to pay the income tax. So it's all starts from the taxpayer on his own voluntary basis. So you normally in a country as with a big population of India, some people they don't upfront disclose the true income, and the government also then loses the tax revenue. Now compare the income tax with let's say some other tax like let's say sales tax. The collection is relatively easy because anybody who purchases any product, the sales tax is a part of the price itself. So even if a small infant or maybe a housewife is buying those products for their own consumption, everybody is made to pay the income tax. Everybody is made to pay the sales tax, which is kind of an indirect tax. But an income tax which is more voluntarily driven, it becomes rather difficult for the government to track each and every taxpayer. As far as India is concerned, it has got a very very low rate or a low percentage of people who are paying the income tax. As per the statistics, nearly out of 125 crores, just about 1%, a little bit more than 1%, do the income tax filing on with them. So that's pretty low. So probably government after this demonetization will try to do something to increase the scope of the income tax, as to bring more and more people, more and more businesses under the income tax scope. Why do we have income tax? The answer is pretty simple. The government does a lot of things for its citizens and for its residents. It provides the defense services, so it protects the borders, it invests into various defense equipments and programs so that all its residents can have a peaceful life. It builds infrastructure, it gives various services to its citizens, and it runs the country on the overall maintaining law and order. So as a good citizens, it becomes a duty to contribute to a fair share to the government, and one of the modes of this contribution is through income tax. Okay. Now let me give you some global perspective. Income tax is a pretty global phenomenon. So I just checked on the internet. There are very few countries in the world which do not have income tax, and primarily the Gulf countries, they don't have any income tax. Now you would say that if the Gulf countries do not have, does it mean that the Gulf countries do not give all these facilities to the residents? So the answer is no. Of course, every country gives these facilities, but it is more a country-specific rule that decides not to how much to have income tax or whether to have income tax or not. Speaking of the Gulf countries, I think that because with the moderate population that they have, and already their income position is very very good because of the oil and natural gas income, probably they have kept income tax at zero levels. Also, it's because they are short of skilled labor, so this serves as a good attraction to the global talent, that they can come there, work and have a tax-free salary. But apart from the income tax, some other taxes are also there which are pretty high, like the indirect taxes like municipal taxes or business licenses. So it's a different case and we need to take it on a country to country. But as far as India is concerned, the income tax is very much there. Now let's focus on the meaning of income very quickly. Why this is important? Because the way income is defined under the Income Tax Act, only that income will be considered for the purpose. For example, if there is some mistake while in the Income Tax Act that they do not include some specific income, so what people will do is, most of the people will try to take some disadvantage out of that and will try to escape the income tax angle. So just to give you a broad perspective, income has been comprehensively defined in the Income Tax Act, and broadly there are five major heads of income which we'll see later. But what's the main understanding of the income is something which comes in with your effort and time that you give. So maybe you are working in a company, so you give your time and effort, you get a salary, you run a business and you get some profit. So that's a very natural understanding. So normally you would receive income through cash, or customers would pay you on a check. But even if you have received income in kind, then that also is included. For example, if your employer provides you a rent-free house, so part of the amount he is paying in salary and partly he is giving you a rent-free house. So how does this work? So Income Tax Act says that whether you pay in cash or in kind, after all it is income. So we need to include that. Then there is no distinction between active income and passive income. So whether you are doing a salary, you are earning a salary with your own time and effort, or you are earning some passive income like interest on bank FD, does not make any difference. So far as it is income, it will be included for the income tax. Gifts in certain situations are considered as income. So we'll see in later session how the treatment of gifts is to be there. Legal as well as illegal income is considered. And of course, disclosed as well as undisclosed income, which is black money, which is the hot topic, especially in the current demonetization scenario, that also is considered. So the government is not bothered whether you have not disclosed it or whether you have disclosed it and whether it is legal or illegal. Normally, no one will declare any illegal income to the government. Nobody will declare that this is the income from bribery. But if the income tax officers have reason to believe that this particular individual has been spending a lot of money on the, maybe through credit card or something like that, they do keep a track, and in case you spend on maybe foreign travel or something, then they might just get a query that what is the source of your income. So whenever this source of income is asked, what is the basic document which gives them the source of income is the income tax return that you have filed. And finally, income does not always mean that you receive some money. You may also lose some money. You may lose in case of a business. There could be a bad time or bad season. You might make a loss. In case of shares or mutual funds or property, you might end up on the losing side. So this loss is also included in the income, which means the income is calculated at a totality level. You might have had a profit and you might have a loss. So if it is a loss, of course there is a different treatment. In case of a loss, it doesn't mean that you will start receiving the income tax from the government. What happens in case of a loss is typically you are allowed to carry it forward in the future years, and whenever there is a profit, so this loss will be adjusted against that profit, and so it reduces your tax liability in the future years. So that's the whole concept very broadly. There are a lot of rules in detail, but I'm not going into the specifics right now because I'm keeping it very, very simple. What are the sources of income? So what are the possibly the buckets or the sources of income from the income tax perspective? So broadly there are 5 different sources. There are salaries, income from salaries. So for all the people who are employed in the with various private companies, public companies, government jobs, all are included here. Then there is income from business and profession. So where normally some people might have a business, or some people might have a profession like as in a doctor or a chartered accountant or an interior decorator or some lawyer. So for self-employed people, whatever money that they receive from the from their clients or from the patients, that all is included. Of course, the business, in case of a business income, it is always considered at a net income level, which means whatever money that you receive and versus whatever expenses that you have to pay in order to do the business or the profession is always reduced. So what is considered is only the net profit or the net income. House property. So this is also important head under which the income is included. If you are having some property which you have given it on rent, then whatever rental income that you get is included under house property. Then it is capital gains or losses. This also is important. You have certain assets, like you have property or shares which you sell it out. When you sell out, you would normally incur a profit or a loss. So whatever is that position, that gets captured under this head. And finally, other sources. So where any income is there apart from any of these four specific heads will come under this residual category. So suppose you are having an interest on bank FD, it is a classic case. Or suppose you become lucky and you win a lottery prize, or you win some prize through KBC. So all of that will come under the other sources. Now what is important here for us to understand is the taxpayer needs to calculate the income, and it needs to also include the income in the correct category. If at all the income is not included in the correct category, if at all there is some mistake in that, either there will be some repercussion from the income tax department side. So income tax may have some query or may take some details from the taxpayer, or it might also end up in litigation, or it could also end up the taxpayer paying lower tax or higher tax because of the rules of each head are different. So you need to understand that every head or every source of income has got some specific rules that need to be applied in order to generate the proper taxable income. Now, who are included in the income tax? So broadly, what are the categories of taxpayers? So broadly, there are these various categories like individuals. So individuals is a very common understanding. It means a natural human being, salaried professionals, all the senior citizens, businessmen, whoever earns income will be captured under individuals. So for example, even a child artist who earns income from advertisement or acting, his income is also included in the income tax act. And nowhere income tax act says that only you have to be minimum 18 years for eligible. So far as you are earning an income, they are going to include all the income in the income tax purview. Then of course there are various business entities. By business entities we mean various forms of a business organization. It could be a partnership firm, it could be a company. Again, companies can be public, private. Again, there could be a classification that there could be a Indian based company or a foreign company who sets up an office. Then there could be banks or insurance companies which are also operating. So all kinds of business entities are included, so nobody is escaped. probably the only entity which is not paying any income tax is the government itself, because you cannot pay the income to yourself. That is the main concept behind it. And then, of course, it does not even cover only business entities. It also covers certain non-business entities, which are like universities and hospitals. So everybody is covered. Whoever has income, you need to come here. Now, how does it work? So every taxpayer needs to calculate the income from each source, identify the income, put that into the correct source, apply all the rules for that respective source from April to March. Then you deduct certain income which are known as exemptions. So what happens? Income Tax Act is a very benevolent act when it comes to certain income. It says that this type of income, okay, it is your income, all right, we are not denying the fact, but don't count it in the income tax calculation. So this is a very good thing for the taxpayer, because this income, entire income, is a tax free. Some examples, it's like interest on your PPF account, then interest on 5-year bank FD, then also in an interesting case, agricultural income is also exempted, because agriculture is considered as a very sacred thing in India, and it is, because nearly 60% of the employment and is there, and we treat our farmers with a lot of respect. There's a lot of subsidies over there. So even this is also one of the subsidy. Whether right or wrong, that's not our point of discussion, but it is a subsidy. So certain incomes are not counted, so which is a very good thing. You should be happy. Then deduct certain investments. So like there are a lot of investment, for example life insurance premium or medical insurance, then there is a your contribution to the PPF, or you had a lot of instruments like Kisan Vikas Patra and all that, government investment. So all of that is included, and there is a limit which is given, that is about rupees 1.5 lakhs for an individual level. So up to this limit you can invest in any of these instruments, and you can get this entire deduction, provided you invest 1.5 lakhs or more. If you invest less than 1.5 lakhs, then that lower amount will be considered as a reduction. So this is also a very good thing for the taxpayer. So these are the two things which will reduce his income, taxable income that is, and it will also automatically reduce the income tax. So after you reduce these two, you arrive at a net taxable income, which is important. Then you apply the correct tax rate. So that tax rate will basically depend on your category of the taxpayer, whether you are an individual, whether it is a partnership firm, or that way. Then you apply that tax rate to the taxable income, and you arrive at a tax amount. Suppose your taxable income is 3 lakhs, and if the tax rate is, let's say, 10%, then your taxable amount, arrive at tax amount is nothing but 3 lakhs into 10%. It's a very simplistic case, just to make you understand. And you just don't arrive at the tax amount and just sit over there, relax. You have to finally pay it to the government. So please pay this amount. And finally then you file your income tax return. So that is the whole process, and this is an annual process. Just some pointers here. Income, it will depend on your residential status. Now what is your residential status? We are not covering here in this session. We will try to cover it in a separate class, because it's a little bit detailed concept. So lower the taxable income, lower the amount of tax. That is the very basic thing. And also the tax rates, as I said, that it will depend on the status of the taxpayer. And even in case of an individual, if you are an individual, the tax rate will depend on your age, because there are certain benefits which are given to the senior citizens. So if you are crossing 60 plus, then there is a certain relaxation, so you pay a lower amount of income tax. And if you are even crossing even 80, then again there is some certain additional benefits, so your income tax will be still lesser. So that is the overall process. So every year you need to repeat the same process and file the income tax return. And another thing is, how does it work from the point of view of the law? So this is the main Income Tax Act 1961, which lays out all the basic principles of the income tax. And every year there is a change in the rates of income tax depending on the government's position of the revenue and what is the position of the growth of the economy. Then that they decide, various other factors are also considered, and they decide the rates of income tax. Now, not only the rates but also the changes are made in the Basic Income Tax Act every year. So as you know, some income is either excluded or included, and they could make some structural changes. Also, sometimes they change the procedure of the way in which income tax is to be administered or collected that way. So some structural changes are made, and there are various clarifications or circulars during the entire year that are issued by the income tax department, and then there are some court decisions and judgments. So these are more important from the people who are doing business or profession. For salaried people, more or less the structure remains very much standardized, and also the changes in Income Tax Act are very specific. So it's pretty simple. We need not go into the higher complications at a court decision or judgment. Maybe it could be required in very few specific cases. Now, what does a filing of income tax return mean? It means that you declare to the government the total income that you have earned in the year. So from April to March, how much was my total income? Now, what were these different sources of income? So, okay, if I say my total income was, let's say, 10 lakhs, how was this income spread over? So how much was under salaries? So let's say 8 lakhs was under salaries and 2 lakhs was under other sources. So that breakup you have to give. What were the amount of exemptions and deductions which you have claimed, which have reduced your total income? So government also wants to know where you have reduced your income, taxable income. So as I told you earlier, the investment limit of about rupees 1.5 lakhs is available under various investments, and also certain income is excluded. So you please give these details. That is what the government wants. And by details, it does not want all the proof, but it just needs to, you need to understand the concept, the nature of the amount, and you need to put that amount in the relevant column of the income tax return. So, what is your taxable income and how much tax you have calculated? What is the proof that you have paid this tax to the government? That is very important. And also interesting thing is, you did not attach any supporting documents with the income tax return. So income tax return is a very, very basic, it's like a spreadsheet kind of a thing, which identifies you by your name, your residential address, your permanent account number, which is your basic identity with the tax department, your date of birth, and so on and so forth. And then you just need to fill in the numbers. Okay, let's look at when paying of income tax and filing income tax return. When are you liable? So, speaking from the purview of individuals only, so you have to pay the income tax only when your taxable income exceeds rupees 2.5 lakhs. That's the very basic exemption limit. As you know, basic exemption limit, it means up to 2.5 lakh rupees income, you are not liable to pay any income tax. So you can relax. So people who are earning about 20,000 rupees per month, they don't have to pay any income tax. Of course, the other sources of income like bank interest or some dealings in the shares of property, that also will be considered here. So the total income from all the 5 sources is considered. And you have to submit the income tax return only when your total income is greater than 2.5 lakhs. So here there is a difference. So you may pay income tax only when your taxable income is greater than 2.5 lakhs, but in case of a submission of income tax return, it is not your taxable income, but it is your total income which is considered, in which case it becomes a mandatory action. So this is a very important point to note. Now, for example, I may have a total income of, let's say, 3 lakhs, and I have invested in that specific government's avenues of about 1 lakh. So what is the status? Now, first of all, whether I need to pay an income tax. So calculate taxable income. What was my total income? 3 lakhs minus my investment 1 lakh, which is remaining is 2 lakhs. So which is less than 2.5 lakhs. So I need not pay the income tax. But I definitely need to file the income tax return in such a case, because my total income is greater than 2.5 lakhs, which is 3 lakhs in my example. So here this is a very important area we need to understand. Now for the business entities, there are a lot of various tax rates, but primarily they pay income tax when their taxable income is greater than 0. And for them, income tax return is mandatory. So even if you are having a loss, you have to file the income tax return for a business entity, which is basically the partnership firm and limited companies and that part. So we are not touching that part right now, because this presentation has been made from the viewpoint of a very common layman, that is an individual. Now just very quickly, what are the tax rates for individuals who are less than 60 years? So up to 2.5 lakhs there is no tax. From 2.5 lakhs to 5 lakhs income slab, you are charged 10%, which means if you are having income of, let's say, 5 lakhs rupees, so you need to pay tax only on the excess over 2.5 lakhs at the rate of 10%, which happens to be 25,000. If your income is from 5 lakhs above to 10 lakhs, up to 10 lakhs, then you need to pay income tax of 20% on this higher income plus 25,000 extra. Though 25,000, what is this 25,000? It is nothing but your earlier slabs, this 2.5 lakh to 5 lakhs, 10% on that is 25,000. So that also you need to pay. Now if your total income is more than 10 lakhs, then you need to pay the tax up to 10 lakhs for the entire thing, that is 1.25 lakhs plus 30% of extra income over 10 lakhs. So that is how the very broadly the income tax is structured. And what is the impact of this? So let's just take some hypothetical example and see what is my income tax amount. So here, if I have considered 5 to 6 scenarios, so starting from a low income to the highest income. So 5 lakhs, if my income is 5 lakhs, 10 lakhs, 15, 30, 50 lakhs and 1 crore. What will be my income tax as an individual up to 60 years? So in the first case, your 5 lakhs, my income tax will be only 20,000. The major reason is that there is some tax rebate of 5,000 which is applicable for the current year. So although the actual amount for 5 lakhs works out to 25,000, but this 25,000 there is some rebate. By rebate I mean a concession which is given. So again that 25,000 is reduced by 5,000 to arrive at 20,000. So around 4% is my tax as a percentage of income. So this is known as effective tax rate. So this is very important to understand, that you should know what is your effective tax rate. The effective tax rate is nothing but the total tax that you have paid to the government divided by your total income, your total taxable income. Similarly, as we move ahead from 10 lakhs, the effective tax rate increases 13%. And as we go ahead, you can see that effective tax rate is continuous to increase and it reaches nearly 31% at 50 lakhs level. Why does it increase? The increase is because of, as you increase the income of an individual, more and more income comes and falls in the last slab, income tax slab, which is 10 lakhs and above, which is 30%. So every income more than 10 lakhs is getting taxed as 30%, which proportion increases. As the proportion of this income increases, your income tax rate also goes up higher. So this the way in which it has designed for the individuals, it is known as progressive system of income tax, wherein the poor or the middle income class has to pay relatively lesser amount, and the richer has to pay relatively higher amount of income tax. That is what the principle is. So what are the advantages of filing income tax? These are the advantages. So I am not going to really say them because this is pretty self-explanatory. And now there are certain FAQs that I thought I should just discuss out with you quickly, on the return filing. So some people say that, I am a salaried employee, my employer has already deducted the tax from my salary, hence I need not pay any tax, and I should not even file any return. So is this contention correct? So the answer is that this contention is not correct, because the employer has deducted the tax only on your salary part. And if you are having certain other income from the interest, or some you have sold some mutual funds or shares, or sold some property, or some other income that you have, you either need to disclose it to the employer so that he can accordingly make those adjustments, or you need to calculate it yourself, number one, so that all the income is considered for the income tax perspective. And also then, should you file any return? Yes, if your total income is exceeding 2.5 lakhs, you should definitely file a return. That is, you are supposed to file a return as per the law. Now, there are also certain scenarios, like maybe I forgot to file my income tax return before the due date. So, just to tell you that for the individuals, the due date is 31st July. Now, maybe this person thinks that now the income tax department will not accept my income tax return because I have missed missed the due date. So the contention of this individual is wrong. You can definitely file a belated income tax return, but again there is some timeline for that. But for the time being, I am not getting into detail. But definitely you can file a belated income tax return. That's the government does not deny you the right. Now another individual comes here and he thinks that I don't earn a taxable income in the first place. So is there a need for me to file the income tax return? Again, yes, in case the total income exceeds 2.5 lakhs, you need to file the income tax return even if you don't have to pay any tax. So paying tax and filing return are in a way not dependent on each other. Both are somewhat independent events. If you have total income exceeding 2.5 lakhs, you go ahead and file your return, irrespective of whether you have to pay any tax or not. And in case you pay any tax, by default you would have crossed the income levels of 2.5 lakhs. So you then need to necessarily do the filing of the income tax return. Now this is another scenario. Some individual may have this problem that I have filed it before the due date, but I have made some mistake. Now what to do? So Income Tax Act says that yes, you can definitely revise the mistake done in the income tax return by filing something known as a revised return of income tax. That is also very much possible. So you don't have to worry much. You just have to ensure that in the second return that you are going to file, you don't make any new mistake, because there is no facility of filing a third return. So please make sure that you correct everything and then you file it the second time. Now very quickly, we are towards the end of the first class. This is the last slide, so you can all relax. I am not going to take any more time. We'll just discuss on the tax planning. What is tax planning? So tax planning, and all the tax experts strongly recommend tax planning to everybody. Tax planning is nothing but reduction of your income tax liability by taking advantage of all the rules, income tax rules and provisions in force. So should we first of all, whether we should pay maximum income tax whether we should pay no income tax, whether we should pay minimum income tax. So ideally we should pay income tax based on our income position and also taking the benefit of all the rules and provisions. If by following some rule you are able to reduce your income tax liability, then you need to really consider it and you need to reduce your income tax liability. That is a very well accepted concept. The government does not expect you to always follow the rule which always maximizes your income tax. It always gives you the benefit that wherever possible, for example, if government has given some incentive in the extra incentive under some sections, you please follow that and take that extra incentive and reduce your income tax liability. Then is it perfectly legal to take this? Yes, it is perfectly legal to do this. You would not be questioned or commented or penalized by following all the legal rules. Now, is this tax evasion? Are you evading income tax? No, this is not tax evasion. Tax evasion happens when you do not follow the legal rule, that is, you do some illegal activity or by some illegal way you avoid paying income tax, but this is perfectly legal, so there is no question of any tax evasion. And we should always focus on this tax planning, but not tax evasion. So nobody will recommend tax evasion to you. And for example, if you know that, this is just an example. Now under the Income Tax Act, if you receive any gift at the time of or before your marriage from anybody, then that is completely tax free. So normally gift, the position is that up to 50,000 gifts under certain specific situations or received from certain specific persons is exempt. But more than 50,000 gift is taxable. But only in case of marriage, there is a special provision that in case of marriage, okay, you can receive this gift, so no problem. So suppose there is some friend who gives you this gift, but he has to give this gift before your marriage and near about your marriage, then only it will become tax free. So if you know this friend who has given you this gift, then please give me his contact number so I can also ask something from him. But in my case, because I am already married, even if he pays me, even if he not pays but he gifts me, then it will become taxable in my hands. So that's all, friends. Thanks for being patient and listening to this master class. Your comments and suggestions will really help us to improve further. So we are waiting for your comments and suggestions. Thanks a lot. Bye bye.